Welcome to the Daily AI News Digest for May 26, 2026. This broadcast is sponsored by bestai.org. Today, we're analyzing a significantly altered technology landscape, one that's being driven by major corporate restructuring, aggressive new pricing models, and shifting regulatory deadlines. Let's get right into today's market realities. Our top stories today reflect a clear structural recalibration across the sector. Microsoft and OpenAI have formally restructured their foundational alliance. We're also tracking how the open-weight DeepSeek V4 model is forcing a hard reset in global software economics, and we'll review the newly finalized staggered compliance deadlines rolling out under the EU AI Act. Here's a look at today's rundown. Number 1, biggest moves today. 2, product and model realities. 3, regulation and business signals. And 4, the analyst's take. Starting with Section 1, biggest moves today, corporate consolidations and IP shifts. The big story here is Microsoft and OpenAI. They've officially terminated their previous revenue-sharing model. So what does the new agreement look like? It replaces strict cloud exclusivity with non-exclusive intellectual property licensing through 2032. This decoupling is important. It grants OpenAI multi-cloud flexibility, while allowing Microsoft to take a highly diversified, model-agnostic approach within its Azure Foundry ecosystem. In fact, Microsoft is already reporting that over 10,000 customers are currently employing multiple models on Azure. But despite this structural divergence, the financial baseline actually remains quite stable. Market analysts currently project that Microsoft is still going to capture approximately $6 billion in revenue from OpenAI integrated services in fiscal year 2026. This move effectively mitigates Microsoft's exposure to frontier model competition, all while securing those underlying revenue streams. Looking beyond Microsoft, the demand for deep technology integration is accelerating corporate consolidation across the board. S&P Global has reorganized its executive structure to consolidate enterprise data. TerraQuantum just agreed to a $3.5 billion SPAC merger to fund hybrid quantum AI platforms, and MindMaze secured 8 million Swiss francs for precision neurotherapeutics expansion. Also highly notable today, xAI has been completely absorbed into SpaceX under a newly formed SpaceX AI division, formally integrating those AI assets into the $250 billion aerospace company. Moving on to Section 2, product and model realities, benchmark data, and software economics. OpenAI has officially launched GPT 5.5. Now, for enterprise buyers and product managers, the headline metric isn't some synthetic math score. It's a 60% reduction in hallucinations compared to version 5.4. This reliability metric is absolutely central when we talk about actually deploying these models in live production environments. The technical benchmarks for 5.5 show some highly advanced autonomous capabilities. The model achieved an 88.7% success rate on SW Bench and 82.7% on Terminal Bench 2.0. Crucially, it features native computer use. That means it can autonomously interact with operating systems and even correct its own errors. As for the standard pricing, it's set at $5 per 1 million input tokens and $30 per million output tokens. However, that pricing structure is already being aggressively undercut. The newly released open-weight DeepSeek V4 has introduced a genuine structural reset in AI software economics. To put this into perspective, the V4 Flash variant is priced at just 14 cents per million input tokens. That represents up to a 96% cost reduction compared to its direct Western competitors, heavily compressing cloud margins across the entire industry. Concurrently, Anthropic has activated its own code reasoning engine, Claude Mythos 1 Preview. During its initial evaluation, the model autonomously identified over 10,000 critical software vulnerabilities. Anthropic is strictly limiting the public preview right now, formally acknowledging that the model's capacity to construct sophisticated cyber attacks poses severe global cybersecurity risks. This brings immediate serious focus to the safety parameters required for autonomous coding agents. This deployment is happening alongside a wider capital push for Anthropic. The company is advancing a major financing round at a $33 billion valuation. Furthermore, they are reportedly in advanced negotiations to utilize Microsoft AI chips for upcoming training cycles, which could potentially route a significant amount of Anthropic's training spend directly into Microsoft's silicon stack. Let's look at Section 3, regulation and business signals, compliance timelines, and market cap. Over in Europe, the EU AI Act Omnibus Amendment has finalized a staggered compliance timeline, By August of this year, transparency rules for interactive chatbots will take effect. Looking ahead to December 2026, strict prohibitions on AI-generated, non-consensual intimate imagery and CSAM become fully enforceable. Now, exemptions and relief have been established for high-risk AI systems. Annex 3 use cases are deferred to December 2027, and Annex 1 product-regulated systems are delayed until August 2028. Shifting over to market capitalization, recent Morningstar data illustrates the sheer economic scale of the AI infrastructure build-out. Since May of 2023, the semiconductor industry's market cap has grown more than fourfold, expanding from $2.2 trillion up to $9.4 trillion as of April 2026. Naturally, this massive infrastructure expansion requires significant volumes of electricity, and that's leading to consistent gains for utility and power stocks. Power supplier Bloom Energy, for example, has seen its shares rise 240% over the last 6 months. Data center utility providers like Quanta Services and MasTec have returned over 300% since May 2023. This clearly reflects the cold business reality of AI's immense physical power requirements. Yet, this financial momentum contrasts sharply with a growing human capital bottleneck. According to the Stanford AI Index, U.S. private AI investment reached a record $285.9 billion in 2025. However, the influx of international AI talent into the U.S. dropped by 80% over the last year alone. This presents a very specific structural vulnerability in a domestic development pipeline. Section 4, the Analyst's Take, Market Realities. The central question institutional investors are currently evaluating is this: do agent revenues actually scale faster than compute and labor costs? As the industry transitions from passive text generation over to active autonomous execution, the unit economics of these agents have to prove viable against the massive capital expenditures required to train and run them. The market is clearly shifting toward fleets of autonomous digital workers, and that requires entirely new governance structures. Auditoria.ai, for instance, just introduced a governed autonomy framework to let agents execute strictly within enterprise-defined guardrails. Underlying this whole shift is the Model Context Protocol, or MCP. It has achieved ubiquity with 97 million downloads, firmly establishing itself as the universal infrastructure standard for this emerging agentic web. Finally, Section 5, Outro, Market Watch. Going forward, the market is closely monitoring the upcoming Computex panel in Taipei next week. The panel is titled Breaking the Memory Wall, and it features leadership from AIC, NVIDIA, and Vast Data. As models shift heavily toward long-context inference, the physical bottleneck has moved from raw compute power to data movement. Investors will be watching very closely for architectural designs that transform storage into an active component of inference delivery. As agentic architectures collide with soaring infrastructure costs, the core question remains: will the software value ultimately outpace the silicon expense? Thank you for joining this explainer of the day's market realities. This broadcast of the Daily AI News Digest is sponsored by bestai.org. We highly encourage you to visit their site for further resources. Have a great day.